morning, traders. I'm Dennis Dick.
And I'm Joel L. Connon. Welcome to Premarket Info.
Market kind of took out that key support here last night, getting as low as 14.45 and a quarter. We have bounced up, trading 14.49 and a quarter right now. We'll analyze and see if this market's going to continue with this breakdown. Earnings from last night included Adobe and Bed Bath & Beyond. Today's earnings, KMX, CAG, and tonight Oracle will report. And UBS is getting bearish the banks. Joel, are we going to continue to break down here, or what's the story?
Well, we've been talking about this level here, and now it's just it's perched right here at 14.49. First, let's take a look at the upside. You had three closes between 14.53 and 14.54. So any run up to there in the regular session is going to be major resistance. I don't have any numbers at 14.45 and a quarter, so that cannot possibly hold up as the low of the day. We're really getting into a vacuum area here. One thing I want our traders to take note of, especially around triple witch, should be a lot of jockeying for position today going into the triple witch tomorrow.
Yeah, we had that big run up, obviously, just back 6-7 days ago there last week. And now all of a sudden we start to get into that vacuum area. So we ran from 14.30 to 14.50 basically in an hour that one morning. And now we're starting to get into that area here again. And we always say what goes up quickly can go down quickly. And there's not a lot of good news out here. It just continues to be bad news. Obviously a FedEx warning the other day, or the FedEx poor earnings. You have Norfolk Southern giving a profit warning last night. When your rails and your transports are reporting profit warnings like that, it means not a lot of goods are being shipped, so it starts to make you nervous from a fundamental perspective as well. But bucking the trend yesterday was Google. Google continued with its breakout yesterday. Is down a little bit with the overall market here this morning, but nice run for Google.
Yeah, it just went through that area we had talked about like a knife through butter, made a 728.56 high. That's really the only reference point you have on the upside. There was resistance at 724.80. We took that level out. Doesn't look like we're going to get to the all-time high today, which is, up, I believe, up at 747.24. Taking a look at the pre-market, it is getting hit a little bit in sympathy with the SPOOs here. You had a spike low down to 724.07, so I would use that as a parameter on the downside.
And talking about runs, Facebook continued with its breakout yesterday there too. It had the pullback after having a couple of good days there 2 days ago, but then yesterday was off to the races again.
Yeah, everyone's waiting for a pullback.
Well, we had a little one there. Got that 2270, came in that 2150 area, and then blasted off again. So I don't know, 2329. It seems to just have a lot of relative strength right now. Little pullback this morning.
Yeah, Zuckerberg got things rolling when it's really all started with that interview. I believe that's the day that we gapped up here. Let's keep an eye on 2337. That was yesterday's high. We're a little bit a ways from that. Above that level, you have some resistance at 24.54, and then you get into that gap area between 24.54 and 25.73. But really, what it's going to come down to is earnings, and they don't report for a while. So really the only thing that's going to really turn around this stock and get things going is decent earnings, and we're not going to know about that for a while.
I do see some coupons now from Facebook on my mobile phone. I've noticed just over the last few days I've seen a McDonald's ad, buy one Big Mac, get another one free, and then it says your friends claimed this and tells you who claimed it. I mean, I don't really like the fact that they're advertising which ones of your friends are eating at McDonald's or which ones of your friends are claiming the coupons, but they are trying to do something like Groupon, obviously, putting that and mixing that in, which we had actually suspected that they might do something like that even last year, but I just don't know if I love that fact that they say, oh, your friend claimed this.
Well, I'm not really on Facebook, so I really,
Yeah, so
you know,
basically, Joel, because Joel's he doesn't like Facebook, so he doesn't even have a
I
Facebook.
don't
He's
like
one of the only people
Facebook,
in the
but
world.
I
He's
like
one
the
of
stock, and the stock went
you like
from
the stock, you don't
38
like
to
the app.
19, and yeah, I'm not a face. I don't know. It's advertising. I mean, they have all these people on their network. Gosh, man, they got to figure out a way to monetize it. But
They're
the
trying.
same
They're
since 38.
they're trying different things, but I'll tell you in that stream, it waters it down a lot because I'm seeing all these advertisements all the way through it now saying, "Oh, claim this coupon your friend did. Claim this coupon your friend did." That's a neat idea, but it's annoying, and I think it's going to tick off some users here. I've just started noticing that in the last week and a half, so I think that could tick off some people too. So interesting way. Like I wanted to see them do something like that. I just don't know if you should throw it right in their face like that. But yeah, regardless, stock is moving up here higher. So trading from a technical perspective, I think Joel gave you a good number. The 24.54 was the high back on the 27th. That's gotta hold if you're gonna play a short. I'd use that for your reference point because if it starts getting to that gap area, it could open right up. Let's talk about Apple just briefly before we go into the earnings movers. Apple has had 3 days of consolidation here around the 700 level. 699.56 is where it's trading in the pre-market, down a couple of bucks here with the overall market. Is this the whole move up, consolidate, and then start to move up again, or is Apple going to start to give back some of its gains?
I mean, based with the spoos being down 5 here, the monster run this had, trading below yesterday's low, or trading at yesterday's low, which was 699.57. I think the sellers are going to be lining up again at the $700 level. You have a nice gap, though, between 99.57 and 96.42. Tuesday's low, minor support. Then you have Monday's low under that, so at 94.61. So there's virtually nothing between the Wednesday's low and 696.42. That's not an area I'd want to be long in during the regular session.
Do have a profit warning here from Norfolk Southern, announcing that their earnings in the third quarter are not going to be good here. A buck 18 to a buck 25. Analyst estimates were up at a buck 63, so it's going to be a big miss. Yesterday, obviously, there's some of these rails got downgraded, but today, now following through, the rails were all down again on this Norfolk Southern profit warning. You got stocks like CSX and the other ones in the sector that are actually UNP getting beat pretty good here, even worse than the downgrade yesterday. So if you thought yesterday was just a time to pick a bottom, you were wrong because the bad news came out here this morning, and Norfolk Southern trading down here at the 68 level.
Yeah, and that 68 sticks out like a sore thumb here. That 68.17 low on June 25th. We've gotten into pre-market. We've gotten down to 67.91. So, boy, I bet you some shorts are licking their chops here at the $68 level. Since 3 days ago, the stock was at 75. It's a nice short-term profit. If, in fact, we can't hold 68, Katie, bar the door, we're going to 67. The only thing that I don't like about this chart here, looking at the pre-market, is usually when you hit these drastic levels, they bounce.
Yeah.
And this is just, it's a dead cat bounce. There's just no one coming in to lift this thing, and 69 will be resistance on the upside.
Yeah, that whole 68 area, I think you've given a good point. I want to point out FedEx yesterday, too. Often they will take it out by a dime or so, try to shake you out. I actually was part of this FedEx trade yesterday. I'm going to bring it up here. I've been talking about...
You were a part of the shakeout?
Yeah, kind of. I actually made money on it, but I was kind of nervous when it took it out. So, anyways, the stock, obviously, we were talking about this 86 level here on the show for the last couple of days. I've talked about it so much, I was like, well, I got to make a trade off that level. So, anyway, so I bought at 86.03 on the first initial drop down here, and the stock actually did spike. So it got to like the 86.03 area. It spiked up a little bit for me, and then I ended up getting about 15-20 cents. I sold half the position, but then it took it out, and I was like, I'm gonna get out, and it only went down to that 85.90. What was the low yesterday? Do you have it there?
590. Yep.
85.90, and then just took off and basically rallied 90 cents in like the next 20 minutes. So these levels, they will high frequency traders know a lot of people are citing those 86 like the whole numbers like that, and they like to take them through by a dime or so, shake out everybody they can, get their stock, and then bounce it. So sometimes the better buy is if you're citing an 86 to actually buy it like 85.95, 85.93, a little bit below the level, because people are leaning on the whole number itself. When that number goes, they're like, oh, it's going to 85, and it's not totally through it. So you got to give it a little wiggle room here. In this decimal world, it's not as easy just to say, oh, I'll get out a 16th below like we used to in fractions. It's hard to pick the exact bottom. You can get the area, but you've got to give it a little wiggle room. So if you can't feel, at least 10, 15 cents of heat, you probably got to reduce your size when you're trading.
And looking at that stock, they had the earnings on Tuesday, and they had established that range, and we had just briefly discussed, kind of like the day or two after earnings, the stock, if it has a large range, we'll test those levels, and so far, FedEx seems to be shrugging off the poor profit warning, or the
it's holding
poor
up that
profit
86 level anyway.
It's
So
holding,
it'll be
it's
interesting
holding.
to see if it goes at it again today. Like we say, one time bounce, maybe two time bounce, three times no such thing as a triple bottom usually takes it out. I always say third time's a charm. So we've bounced off there actually once in the early pre-market from the earnings announcement. We bounced off there yesterday. So if you're counting that, this could possibly be the third time down there. So you want to be somewhat cautious if it's getting down there again, especially if the overall market starts to roll over. Adobe reported earnings here last night as well. Stock actually came in line. Is getting a bit of a lift here in the pre-market, trading 33.40 right now. Joel will go find that after hours range there for you. But interesting enough, 33.40 coincides nicely with a September 17th high at 33.42.
Yeah, you got some crazy person bought this at 34 in the pre-market. That's been your pre-market high.
Wow.
Since then, you've had some consolidation here right around the 33.30 level. That does not quite fit into yesterday's range. But if you're looking at the last three highs, last two highs were pretty close, 33.26, 33.17. So as long as it holds that area, that 33.20, I think it's good to go up and test that $34 level. You had two highs right around there, 33.98 on August 22nd and 34.09 on the 21st. So call that whole area 34 major resistance.
Definitely. You got the highs back there from back in May. You got highs from August. And, we got the pre-market high in there now. So I think a lot of reference points in that 34 area. So I do agree with you on that one. BBBY reported last night too, Bed Bath & Beyond. The earnings were not out of here and beyond, though. 98 cents against estimates of 1.02, so they missed by 4 cents. Stock actually is trading down here in the pre-market, down 5% at 65.35. That's a pretty big breakdown here. We talked about Bed Bath & Beyond a couple days ago, speculating that it was breaking down. Earnings were not good, and it has completely broken down here and now. The 65 area is interesting because you had a couple highs there, but I don't know. What's your take?
Yeah, it's kind of no man's land here. The initial panic took it down to 64.01. You see a low underneath that at 63.20. We've gotten a bounce, just major consolidation here at the 65.30 level. Been trading there for a majority of the pre-market session. Use 65.30 as a pre-number, as a swing number. That's that low from the pre-market at 64.01 is going to be minor support, and then the major support comes in at this low way down here at 63.20.
KMX, which is CarMax, reported earnings here this morning. They actually missed earnings. It was 48 cents against estimates of 52. But then they announced they were opening 10 superstores in 2013, and the stock got an initial lift off of that news, but now has rolled over and is actually trading down. Joel, how high did this CarMax get here on this news?
Ah, wow. The initial pop got it over the $33 level, got it up to 33.56.
Yeah, so taking out a new 52-week high up there at 33.56 on an earnings miss, but because they were opening a few more stores, people got excited. They look like they were wrong because the stock is trading down now, actually.
Yeah, it's not a 52-week high though. We
Oh,
traded back. It traded back around
high of the move.
35.
High of the move.
Yes, high of the
I don't
move.
have. I
High of
only
the
have a
move.
5 month chart. I was assuming it was the
Okay,
high.
this this thing has been. This is what the pre-market chart you call a ski slope. This thing, since it hit that 33.56 level, has been straight down. But where it's come down to is the $32 level, which was yesterday's high and backed up by the previous day's high at 31.92. So 32 sitting on support. If it can hold there, maybe get back up to the $33 level. It breaks this 32 level, and it looks like you have air down to 31.
Another food stock trading up here in the pre-market pretty substantial. We've seen what happened to GIS when that stock had its earnings and was trading way up and then didn't even come close to trading up to where it was in the pre-market. Now Conagra, a little different story. It's traded a lot of volume up here. 80,000 shares have traded on Conagra, 27.02. The earnings were 44 cents against estimates of 36. They raised the dividend, so they did a lot of things right. So Conagra is definitely going to open higher. Can it open over that 27 area? We had lots of resistance at 26. That's
Yeah.
history. It's going to open way above there, I would assume. So now you got to go to the weeklies to try to find some resistance here, and that 27 area does kind of stand out to me.
Yeah, this is a big move for this stock. You did have a high going back in February. You hit a high at 27.08. Just got one real straight tick in the pre-market here up at 27.40. That was only 400 shares. What you're going to have here is you're going to have a lot of stock in the book starting at 26 here. Someone was trying to sell at 26 not too long ago, back on the 13th. That same GTC order was preyed on by high-frequency traders back in July. So above 26 and all those other levels in there.
And the New York book, yeah.
In the New York book, boy, I tell you, for this thing to open up at near this level, then, boy, the specialist is going to have like a huge buy order and, take it way up here to open up here because there's going to be a lot of sellers.
There's a lot of orders through the New York book, and that liquidity becomes active at the opening of the New York Stock Exchange, which is at 9:30, and the specialist will put together, they call him the designated market maker now, but we used to always call him specialist. They changed the name back in 2008. But he's going to put together that print. So what I like to do is look at what the volume is. It says 66,000 shares here. My other software says 84. But regardless, this thing's going to trade well. We're still an hour away from the open. This thing's going to trade well over 100,000 before the open. So all of that pre-market action will probably participate in the opening print. So what I like to do is watch the volume. If the volume is only like 10 or 20,000, I'd say no way. But because the volume is climbing pretty dramatically, this stock probably will open up quite a bit and possibly might open up at 27. So I wouldn't say it's out of the realm that it could open this high. Like yesterday with the GIS, it wasn't trading the type of volume to be able to open this high. But this Conagra is trading some pretty decent volume for the stock. So the opening print could surprise you and could be pretty high. I just don't think over 27. And right now it's trading 27.05. I kind of think the opening print is going to be 27. I'm trying to estimate the opening print for you guys here. So let's see how I do on that. 27.05 is where it's trading right now, though. Jefferies reported earnings here too. We're going to run, and the show's going to run a bit long here, but Jefferies has reported earnings. 15.66 is trading in line right now from where it closed. The earnings were 32 cents against 30. Here's a stock that's kind of had a nice little bounce back, but just been hanging out for the last couple days. And here in the pre-market, nobody wants to make a call. Stock is just kind of hanging out.
Just as long as it holds 1540, it's been holding that level for several days after it's run up 1535, 1538. You got a lot of those. You got to consider this stock still to be in an uptrend as long as it holds 1540. You got a real stupid print out here at 16 and a quarter. I don't know who the heck did that.
That's always somebody.
But we will use that as resistance, and then also you have to look at the high of the move so far at 1644.
Oracle reports tonight, so we should do a quick technical for our Oracle traders out there. Trading down 33 cents here, but I'm looking at resistance areas, and when you're trading these, you want to look out to the weeklies and you want to try to find different resistance areas for sure. We have this huge uptrend we had been talking about in Oracle. The bottom of that trend's down at 32, but trends aren't as relevant as old highs and old lows when you're talking about earnings. And if I go out to October of 2011, you had really multiple highs in this 33.80 area, so that's about a $1.30 up from where we're at. That whole 34, I'll call it, that's probably going to give you some pretty good resistance if Oracle has a good report. If it starts to break down, then the support's kind of dicey. Maybe Joel can find you some.
Yeah, I think you would have to look. I mean, you do have a double bottom kind of forming here, and we're actually trading under it. 32.56 was the low yesterday, and you had a couple lows early in the week around 32.60, 32.70. So it is opening up below support. If it gets back above 32.75, you got a chance to challenge yesterday's high at 33.08. Coming on the downside, if we continue this downward movement, really your first support level comes in on the low at September 13th at 32.09.
UBS bearish the banks, downgrading Goldman, downgrading Morgan, downgrading Citigroup. So all of those are trading down here this morning. UBS citing valuations, saying that they think they've had a pretty decent run and they're fully valued for now. So that's why these stocks are trading down, putting some pressure on your banks overall and probably bringing the market down overall, this UBS downgrade as well.
Well, if you're looking at the Goldman chart, I don't think this would be a downgrade that I would want to fight. I mean, it would just had a monster run. We're just hanging out at 117.40 in the pre-market. This is kind of a scary chart. You had a low at 117.68 on the 13th. But below that, you got a buck drop to 116.69 and then 115. So if you're trying to pick a bottom on this one, I don't think it's going to become today. I mean, this thing's had a move here from what, $94, 93, 90.66, yeah, 90.66 over to 122.60. Over a 30-point move. It's got to pull back.
This is what the analysts are supposed to do, though. Like, really, this is what they're supposed to do. When a stock has a good run-up and it's got valuation, the name of the game is buy low, sell high. Well, give UBS at least some props. We don't know if they're going to be selling the high, but at least they had the guts to come out and say, maybe this is going to be the high for now. So at least they're trying. So on all these stocks, they've obviously had a heck of a run, and they're saying, we think the run's a little bit overdone. Maybe you should basically lighten up, is what they're saying. And that's what the analysts really should do. I hate these analysts that come out and everybody's thrown in the towel and people are downgrading Facebook at $17. And that's just, not helpful at all. Or you get these other downgrades on stocks that are basically going to zero and they're, downgrading them after they've already fallen 95%. So that's not helpful at all. But stuff like this is helpful. So I think we should give some UBS some props today. We are running late.
I just want to tell you one other thing on this Goldman. Sometimes when you get these down openings, you get a little sympathy play to the upside. But if you get a run back up to 118.75, the 2-day low, or 119.02, yesterday's low, interestingly, it's settled on the low yesterday. So maybe UBS was selling yesterday and not today.
Oh, probably. Anyways, we're running late here, so overall market thoughts. We do have triple witch coming up. We have taken out that support area in the pre-market. Obviously, we take out that 1445 and a quarter low. Not much below there, so you got to be careful if you're getting long this market at this point in time. That's our show for today, folks. We'll be back with you guys tomorrow.